In March 2020, one number hit 8. People were terrified. They sold everything. And it turned out to be one of the greatest buying moments of the decade. Today, that same number just hit 12. And almost nobody is talking about what the price is quietly doing underneath it. This matters to your money even if you own zero crypto, because this same fear gauge moves stocks too. Here is my take, and it cuts against the headlines. Extreme fear is not a reason to panic. It is data. And right now, the data is doing something strange. The crowd is terrified while the market is already going up. Let me show you that gap and what it usually means next. First, what is this index? The Crypto Fear and Greed Index is a single score from 0 to 100. 0 means everyone is terrified. 100 means everyone is euphoric. Today, it reads 12. That is deep in extreme fear territory. Think of it like a thermometer for emotions. It does not measure how good the asset is. It measures how people feel about it. It blends things like price swings, trading volume, and social media mood into one number. Why does this exist? Because markets are not just math. They are millions of nervous people. And when those people all feel the same thing at once, that itself becomes a signal. The index was built for one reason, to put a number on a feeling. Because a feeling is hard to act on, but a number is not. When the number is screaming in one direction, it is often time to slow down and think, not speed up and react. That is the whole purpose of measuring fear in the first place. Now here is what is actually happening today, and it is the part the scary headlines skip. The fear index sits at 12, but look at the price. The total crypto market is worth about $2.25 trillion right now, and it did not fall today. It rose about 1.7% in the last 24 hours. Bitcoin itself is trading around $63,300. That is not a crash. That is a green day. So sit with that for a second. The mood says panic. The price says recovery. Those two things disagree. That disagreement has a name. I call it the fear gap. And it shows up at turning points more than almost any other time. Even one corner of the market, decentralized finance, jumped over 5% today. So under the surface of all this fear, money is already moving back in. The emotion is lagging behind the price. That is the whole story today. Feeling and reality have split apart, and this is exactly the moment most people get wrong. They wait to feel safe before they act, but by the time it feels safe, the easy gains are usually gone. The market does not ring a bell at the bottom. It just quietly stops falling while everyone is still afraid to look. That is what 12 on the index paired with a green day is trying to tell you. Let me give you 3 things the coverage glossed over. First, history. Look back at past readings under 15. In the major fear spikes of 2018, 2020, and 2022, the deepest fear did not mark the top of the pain. It often came near the bottom after the worst selling was done. Extreme fear has, more often than not, sat closer to lows than to highs. Second, the speed of recovery. Notice that the index is at 12 while the market is up. Normally, fear and falling prices move together. When they split, when price rises but fear stays stuck, it usually means sentiment is just slow to catch up. People stay scared for days after the danger has passed. That lag is the opportunity. Third, the crowd math. When everyone has already sold in fear, who is left to sell? Selling pressure dries up. That is the quiet mechanism under every recovery. Data suggests the heaviest fear readings tend to come when most of the weak hands are already out. None of this is a guarantee. Crypto is volatile and risky. But these 3 patterns are the real story under the headline. Let me add a 4th point that ties them together. Notice how all 3 work in the same direction. History says deep fear sits near lows. The fear price split says emotion lags reality. And the crowd math says sellers are exhausted. When three independent signals point the same way, that is worth more than any single headline. It does not promise a rally, but it tells you the setup is the opposite of what panic feels like. Your feelings and the data have rarely been this far apart. So what does this mean for your money in plain terms? 3 roads. Best case, over the next 30 days. Fear fades, prices keep climbing, and the people who stayed calm look smart. Some analysts believe deep fear readings front-run recoveries by weeks. Base case, the most likely, over 60 days. It stays choppy. The market grinds sideways while the mood slowly heals. You do not get rich fast, but you do not get wrecked either. Patience wins. Worst case, over 90 days. The fear is right for once. Bad news hits and prices fall further. This happens too. That is why crypto is high risk. This is not financial advice. Always do your own research before investing. The lesson is not buy because of fear. The lesson is do not sell just because of fear. Those are very different choices for your money. Let me make it personal. Picture 2 investors today. The first one sees the scary headlines, feels the fear, and sells at 63,000. The second one sees the same fear, checks the price, notices it is rising, and simply waits. Same information. 2 completely different outcomes. The only difference is one let emotion drive, and the other let data drive. In the next 90 days, that single habit could matter more to your returns than any stock pick. Calm is a strategy. Now let me argue the opposite, fairly. The strongest case against me goes like this. Sometimes fear is correct. Sometimes the crowd is scared because something is genuinely breaking. In 2022, fear stayed low for months, while prices kept falling. Buying every dip in fear would have hurt you for a long time. That is a real and serious point. Fear is not a magic buy button. A low reading can stay low. Here is my honest response. I am not saying fear equals buy. I am saying fear equals pay attention. The mistake is treating emotion as a decision. The skill is treating it as information. You still need to ask if the fear is justified. This is not financial advice. Do your own research. Steel manning the bear case actually strengthens the point. React to facts, not feelings. What do credible voices say about this? The whole idea traces back to Warren Buffett's most famous line. Be fearful when others are greedy, and greedy when others are fearful. That is contrarian investing in one sentence. Some analysts believe sentiment indicators work best at the extremes, not in the middle. Data suggests the signal is strongest below 20 and above 80. Major institutions watch these gauges, not to obey them, but to spot when the crowd has gone too far one way. Others warn that in crypto specifically, sentiment can stay irrational longer than your patience can last. The honest read, the experts agree the extremes matter and disagree on exactly when, and that disagreement is useful to you. It means nobody can hand you a perfect signal. What you can do is build the habit the pros share. They do not act on the number alone. They use it to ask one question: has the crowd gone too far? Today, with fear at 12 and prices rising, that question almost answers itself. The crowd feels one thing while the tape does another. Smart money lives in exactly that gap. So what do you actually do this week? 3 steps, easiest first. Step 1, today. Just look at the number yourself. Check the fear and greed index before you make any emotional money move. Let the number slow you down. Step 2, this week. Write down a simple rule for yourself. For example, I will not sell purely because I feel scared. Putting it in writing beats deciding in a panic. Step 3, this month. If you invest, consider a fixed schedule instead of reacting to headlines. Buying the same small amount on the same day each month removes emotion entirely. It is boring. Boring is the point. Calm beats clever in volatile markets. Tomorrow, I am showing you the one chart that flips from fear to greed faster than any other, and how a few people use it to time the whole market. Once you see it, you will check it every morning. Before you go, remember the one idea from today. Price moves first. Feelings follow. Once you internalize that gap, you stop being the person who panics at the bottom. You become the calm one in the room. That single shift can change how you handle every scary headline for the rest of your investing life. You will not want to miss that one. Subscribe for daily market updates. See you tomorrow.